let's go back to these markets again. Red and green on the screen. We got a pretty solid earnings outlook. We got a Fed that's cutting rates, maybe not as much as we initially thought, but is that enough to propel this market forward in 2026? Let's talk to someone who does this stuff for a living. Rebecca Walser joins us. She's president of Walser Wealth Management, joining us here in our studio. Rebecca, it's a heck of a year for investors in 2025. If you're in stocks, bonds, really good returns. How about next year?
Yeah, I wish I could say, I believe we're at the beginning of the monetization of AI. It's obviously hyperscaling. We've got the hyperscalers involved first, but I really do think that we're at the very beginning. But monetization is always an ugly process. It's 2 steps forward, 1 step back. And investors need to know that very openly going in, that it can get ugly at times, but you have to stay the course. If you had de-invested in 2000, 2001, 2002, you would have missed all of the after, monetization of the stock market, or excuse me, of the internet. So we just want to encourage investors to stay the course and invest to the level of risk tolerance that you can stand, because it is going to get choppy. But long term, this is going to change the way we do everything. This is probably the largest economic change in the history of time. And so definitely do not be caught on the sidelines.
How are you thinking of this whole AI frenzy? I mean, Oracle is down almost 15%. Do you think it's a positive sign that it's getting punished? We have a lot of talk of froth and overvaluation.
Yeah.
And why?
Well, I do think that, we did see earlier this year a lot of exposés on, all the hyperscalers are helping each other. They're all investing in each other. And obviously Oracle kind of broke the actual mold, because they came in and said, we're not going to just use free cash flow or open, cash, on hand. We're going to actually debt finance. And that's the issue that they're having. Their debt to revenue ratio is just is a huge problem. And I do think that it is good that the market is saying, hey, we're actually really looking at the granular data, and we're going to punish you if you're not really getting the revenue that you need. And obviously, it was just such a big over expenditure on the data centers that I think the investors really said, wait a minute, what's going on here?
What's the theme for you? Is there a theme for you in 2026? Is it still ride this AI theme, or is there anything else? We need to branch out, maybe think of something different?
I would say that I think that what we're going to start to really see is the beginning of the monetization of the new fintech. And so I really like Visa, because Visa is a legacy traditional finance platform, but really has made massive strides, Paul, in making sure that they can do stable coins, tokenization, and blockchain processing. JP Morgan just named them as the payment processor of choice because of this. And so I think that we need to see more traditional finance banks, even, I would say, hey, get out of the normal way and start to look at this new thing, because this is where we're headed. We are going to be moving to blockchain, fiat currency, actual paper currency. All of that is going to eventually be replaced. And I do think that the sooner that people can get on board with that, again, to the subject to their risk tolerance, because people will write in and say, you told me to do this, subject to your risk tolerance. Let's be clear. But the other thing is, I think that we have a macro global economic currency change, and I think for that reason, commodities are still going to be very hot. Gold still has a long way to run, and so does silver, because we're really now starting to see the hyperinflation of the fiat currency, and that's why the commodities are doing so well.
I saw that you're not only a wealth strategist, but you're also a tax attorney.
Yes.
And earlier you made a point that staying the course is important. What are the big tax planning mistakes you're seeing, or that you see that investors do a lot before the year end? We see a lot of
So I'm a huge believer in retirement savings, but I have always been kind of, as a tax lawyer, opposed to pre-tax retirement savings, because what I notice is that the retirement wealth gap and is coinciding with the baby boomers retirement. So we have the first full generation that paid Social Security their entire working years, moving fully onto Social Security for the first time. That's the baby boomers. Our last boomer will reach full retirement age by 2030. And so what we have is a massive tax need coming to support all these boomers that are going on to Social Security and Medicare, and they are going to look at the ERISA accounts to fund that. So I just caution people. I have people that come into my office every day and say, I'm projecting a 30% tax rate for the rest of my life. And I'm like, you have several million in an ERISA account. Let's make a plan. So Roth conversions, taking things, paying the tax. Now we're in the third lowest tax regime that we've ever had in the history of America, FDR and Reagan being the first two lowest. So under the Trump regime, it's the lowest tax rates. Buy the government out of your taxes while and before we get to the baby boomers and the taxing just escalating massively in these next 4 years.
John, I'm a December 63 guy, so I think I just make it into boomers by a month.
Oh,
so,
nice.
I don't want to go there.
Some respect for your elders, John. What's the future of Social Security? I'm asking for a friend here.
Yeah. So I don't believe that Social Security is going to go away. I'm not trying to scare people at all, but I do believe that the math cannot be fooled. And the math says that we're probably going to have to go to some level of means testing for benefits. And I only say that because if we don't and we deliver all of the benefits promised, the CBO did an analysis in 2009 and they said that their middle class tax rate of 35% would have to go somewhere in the 60s if we are going to be able to pay everything. So unless AI productivity makes massive surpluses and we get some sovereign wealth fund going in this country to get massive government revenues, we will not have enough tax revenue. And so I don't believe it's going to ever go away, but it is going to be very hard to deliver the benefits promised. And so that is a problem.
This is my retirement strategy. Never retire. It's
Well,
simple.
we're never going to retire. I think we have it worse.
Yeah, you guys are screwed.
Yes.
Yeah.
And
Yeah.
I'm a renter. I'm going to work forever. I'm going to be beside John forever, maybe, in
There
this
you go.
studio.
That's it.
Oh,
You gotta,
nothing
you
to be
gotta,
happy. I think that's a theme, right?
you gotta plan ahead, save. Rebecca, thank you so much for
Thank
joining
you,
us. Rebecca
guys.
Walser.
Thank
She's the
you.
president of Walser Wealth Management, joining us live here in our Bloomberg Interactive Broker Studio. And if I've done nothing for my kids, I've beaten into them the 401k full match. And they're all
Wow.
doing it, so they say. So just start
Nice.
early.
Just add Roth in there.
Yeah, exactly. All right, exactly. We'll see how that goes.